Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Money 2020 in Las Vegas, Nevada. Joining me for this segment, we have Jag Prakasam, he's CEO of Qdeck.ai. We're going to discuss how technology used by registered investment advisors has evolved over the years. Jag, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
All right, this is actually one of my favorite topics. How has technology in the RIA space evolved in recent years, and what role has your company played in this evolution?
Yeah, to be honest, in the past 60 years since financial advisory has been there, there's been technology evolution, but never to the way the services were delivered to the client itself. For example, the client profile has remained similar. Their expectations haven't changed a whole lot. So financial advisors always came in, adopted technology to optimize maybe the workflow, the back-end workflow, a few things, but the client really never saw the impact of it, right? But here it is, here we are in the middle of one of the biggest wealth transfers from one generation to the next, $10 trillion by 2025 and $84 trillion by 2045, right? So here is a brand new investor walking in who are digital natives, who like self-service transaction models, and they like hyper-personalization like their parents, but not in the same way like their parents wanted it. They want it in a digital framework. They care about things like ESG, which their parents, to be honest, never thought of or cared about, to be honest, right?
Yeah.
So this is where our solution comes in to appeal and help the financial advisors to offer offering to that generation.
It's so interesting in the fintech space. I feel like it's much more customer driven versus here's your product, this is what we're telling you you're going to have. So it's an era where customer experience is paramount. How does Qdeck.ai prioritize and enhance a client experience in wealth management?
So the beauty of it is this, that we use the power of AI. We actually put the power of AI into the hands of the financial advisor. They get to determine how much they are comfortable with. See, we are in finance, we are in one of the most regulated industries. Mm-hmm. So we don't have the sort of the luxury like a social media app can have, and that's why we actually have a variety of ways we can hyper-personalize to the client with the amount of data that is available, all right? For example, if someone has a goal of buying a home or is selling a home or has some surplus capital, you're in a rising interest rate environment. What is your utility for that capital going forward 5 years, 10 years? Now, all of those things, we actually offer that advice to the financial advisor. Then they determine if this is something they are comfortable with and they want to roll it out to their clients, right? Yeah. But we use a variety of data points, right? So for example, if there's a client that the financial advisor has with 5 stocks in it, let's say NVIDIA is the darling of the stock market today, they have NVIDIA, we actually track the news in real time. So unlike ChatGPT, where it's trained until, I forget, September of 21 or something like that, we actually consume real-time news. We consume 50,000 articles in real time, 3,000 financial sources, and we give them a nice summary and opinion piece on the outlook for a stock like that, right? But this is important because we also give them auditable primary sources for every statement that we make, every recommendation that we make, so that they can go back in there and check, okay, where did this come from? What articles went into making this statement? Is this legend?
Yeah.
Right, which is a challenge you face with a lot of the AI chatbots today. But
which is interesting because it's not like AI is replacing financial advisors, it's helping them make more at the end of the day, they are making the informed decisions that's best for their clients. And I'm glad you brought that point up. Let's switch gears a bit and talk about how Qdeck.ai is working to democratize access to the markets, the platforms, making it more accessible for a broader range of investors.
Yeah, no, this is actually a great point you bring about because, see, financial advisors have a lot of experience. They've gone through multiple economic crises, right? A lot of the newer robo-advisors, some of the popular ones in the space, they all came in after the great financial crisis. They have never seen a rising interest rate environment. They've never seen a market crash. The one time that they saw a little bit in March of 2020, the site crashed. one of the popular ones, right? Because investors wanted to redeem, right? But here is a situation that now, by using our platform, financial advisors can actually manage smaller accounts, right? By way of which it actually makes it profitable. Because until now, if you had to work with a financial advisor as a retail investor, you needed about $500K to $1 million in liquid investable assets. Now that is a high bar for the next generation of retail investor, right? But now, it was a simple reason because financial advisors were not profitable if they managed accounts below that. But we've provided an infrastructure that actually allows them to do that. Now they can manage a $50,000 account and still be profitable. But guess what, on the retail investor side, now they actually have a wide access to all these financial professionals who've gone through multiple crises and they have the experience to go through with it. So in that sense, we have democratized it. We have provided more access to retail investors, to quality financial advisors, rather than just simplistic models and a few options.
So then it sounds like leveraging the AI in the Qdeck.ai platform, it's not simply about, okay, here's our stock picks, we can beat the market. This is about risk management. So hopefully you learn something along the way and you don't lose everything at the end of the day. Because I mean, like, to your point, for the past 10 to 12 years, market went from the bottom left to the top right. It wasn't that hard to have a positive return, but you got to learn how to manage that risk.
Absolutely, because most investors, I can assure you, if you had, let's say, a retail investor has worked for 10 years, has $100,000 of liquid investable assets, right? Do you want to go through a 60% drawdown in your portfolio? I guess not, because that investor was saving up money to buy a home or whatever it is that they wanted to do. A 60% drawdown like we had in 2008 would be horrible for them, right? This is the environment that they need, actually, a financial advisor to hold their hand through this environment. There's actually a lot of value in the financial advisor space. A lot of them think about AI as a way to replace financial advisors, and I don't believe that's the case. That's been the story about healthcare, for example, forever, right? But I think where there is value is in the AI co-pilot, not necessarily in the complete sort of, that is the reason, automated flying came into being, right? Long before, that technology already exists, fly-by-wire as it was called before, but still we all want a pilot. We all want a pilot. I think there was a study that came out, like how many people want to fly a plane without pilots, even though all crashes are caused by pilot error.
Right.
How many of them want to do it? Not many.
Yeah.
It's a minor percentage, even though that technology has been there with us for 20 plus years.
That's a great way to put it. All right, Jag, we appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me for Money 2020. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.